Okay, yesterday we discussed regarding the introduction part of single entry system. Today I come to the your syllabus, which is conversion of single entry to double entry system of bookkeeping. Okay, conversion of single entry to double entry. So to enjoy the advantages of single entry double entry system of bookkeeping, we convert the single entry system of bookkeeping to double entry system of bookkeeping. Whatever drawbacks a trader faces in connection with the single entry system bookkeeping, and to overcome the drawbacks of single entry system bookkeeping and to enjoy the advantages of double entry system bookkeeping, we convert the single entry system into double entry system of bookkeeping. Okay, so the conversion involves converting the single entry to double entry, and which single entry system is not a reliable system. Double entry system is a reliable system of bookkeeping which is accepted by the society and which is accepted by the government also, income tax department and other departments. Okay, so the main objectives, the conversion objectives of conversion are: the first is to find out the correct profit. First objective of conversion of single entry to double entry system is find out the correct profit of the business concern. I know you calculated the profit in the single entry system of bookkeeping also. Whatever profit you calculated in the single entry system of bookkeeping, that is not a exact profit and that is not a correct profit, because all the transactions related to the business are not properly recorded. Therefore, whatever profit you ascertained in the single entry system bookkeeping, that is not a correct profit. So, if you want to find out the correct profit of the business concern, double entry system is necessary. Okay, therefore, we convert the single entry to double entry system. This is the first objective. And second objective is to find out the true and fair financial position of the business concern. If you want to know the true and fair view of the financial statements, what is the actual position of your business, what is financial strength and weaknesses of your business, to know all those things, double entry system is essential. Therefore, we convert the single entry to double entry system of bookkeeping. And third objective is to make the accounting ideal and reliable. Whatever accounts you maintain under single entry system are not the ideal one, because you prepared according to your requirements, you prepared according to the manner convenient to you people, so that is not an ideal one. And that is not a reliable. One cannot accept it, because the single entry system itself is a incomplete one. Therefore, if you want to prepare the accounts ideal and reliable, double entry system is essential. Therefore, we convert the single entry to double entry system of bookkeeping. And next objective is to make accuracy of accounting records. To know the accuracy, arithmetical accuracy of your accounts, double entry system is essential. Under single entry system of bookkeeping, arithmetical accuracy is not possible. Therefore, it is not accepted. So, to measure the arithmetical accuracy of your accounts, conversion is essential, main objective. And next is to make a meaningful analysis of financial statement. If you want to analyze the financial statements for the purpose of taking decisions, to take the financial decisions, you have to analyze the financial statements. So, financial statement is possible only with the help of this Every day I am sending the videos. Every day I am sending the videos. You go through the Google Drive, open the Google Drive and see the videos and download them. I don't know when I will delete them. I don't know when I will delete them. Therefore, every day you download the videos and see the videos. No problem. Okay. To make meaningful analysis of financial statement, it is necessary to convert. Okay. Next objective is to enable taking effective steps for the improvement of financial position. If you want to improve your financial position with the help of accounting information, double entry system is essential. Single entry system is not useful for making steps or taking steps for improving your financial position. And last is to enjoy the other benefits of double entry system of bookkeeping. In the double entry system of bookkeeping, there are benefits to enjoy. If you want to enjoy the benefits of double entry system of bookkeeping, convert the single entry to double entry system. Okay. These are the objectives of conversion of single entry to double entry system. Now we see the steps in conversion. What are the steps to be followed in the conversion of single entry to double entry system of bookkeeping? The following steps we have to follow. First step is ascertaining the missing information. Ascertainment of missing information. In the single entry system of bookkeeping, a trader recorded information which is essential to him, and some information is recorded by the trader and remaining is not recorded in the books of accounts. For example, some personal accounts are recorded and some personal accounts are not recorded, and some cash transactions are recorded and some other cash transactions are not recorded, and incomes and expenses are not at all recorded. Therefore, first step, you have to find out the missing information. Whatever the missing information is there in the single entry system of bookkeeping, first you have to find the missing information, means which is not recorded. Okay. So missing information may be relating to opening balances of the transactions, opening balances of the accounts, or closing balances of the accounts, or any account item, any transaction is omitted, asset balances, liability balances, purchases, sales, like that. You have to go through missing information. Missing information is the first step, ascertaining the missing information. Okay, missing information you have to find. For the purpose of missing information, you have to prepare the opening statement of affairs. Okay, opening statement of affairs already you prepared in the PUC first year class. In the single entry system of bookkeeping, you prepared the opening statement of affairs. The same opening statement of affairs is prepared for the purpose of ascertaining the opening balance of any asset or liability or opening capital. Remember this. Okay. And secondly, debtors account. You have to prepare the debtors account and find out the missing information. To find out the missing information, first you prepare the statement of affairs. Secondly, you prepare the debtors account. Then preparation of bills of exchange. You have to prepare the bill of exchange account. Bills receivable. Bills receivable account is related with debtors. Okay. Bills receivable account is related with debtors account. Therefore, you have to prepare this bills receivable account simultaneously with debtors account. These two accounts are linked each other. These two accounts linked each other. You prepare these two accounts and ascertain the missing information, missing account. Okay. Next, creditors account. Creditors account is prepared to find out the missing information related with the creditors. Missing information related with the creditors. Then bills payable account is prepared along with creditors. And these two accounts are simultaneously prepared, and bills payable account is related with creditor account. And these two accounts are prepared to find out the missing information related with creditors. And second is bills payable. Bills payable account is prepared to find out the missing information related with bills payable account. Okay. Then next is memorandum of cash book. You have to prepare the cash book. Double column cash book you have to prepare. With the help of double column cash book, you have to find the missing information related with cash transaction. Okay. Then you have to prepare the trading profit and loss account. Trading profit and loss account under double entry form. Then lastly, balance sheet. These are the steps you have to follow in the conversion of single entry to double entry. First, you have to prepare the opening statement of affairs. First requirement is opening statement of affairs. Second requirement is debtors account. Then bills receivable account, creditors account, bills payable account, cash book, then trading profit and loss account, last balance sheet. Okay. These are the requirements for your conversion of single entry to double entry system. Okay, these are the requirements of conversion to double entry system. Okay, we will see one by one. First is opening statement of affairs. First is opening statement of affairs. What is statement of affair? What is statement of affair? Statement of affairs is a statement containing various assets and liabilities of the firm. It is the statement containing various assets and liabilities of the firm. And it is just like your balance sheet. It is just like balance sheet, but not a balance sheet. It is not a balance sheet because some assets and liabilities are estimated. Assets and liabilities are not at their actual value. They are estimated. Therefore, it is not a balance sheet. Okay. Then it is prepared to ascertain the opening capital of the firm, or it is prepared to ascertain the opening balances of assets and liabilities. To find out the opening balances, remember this. With the help of this, sometime we ascertain main purpose of preparation of this statement of affair is to find out opening capital. This is the first. And subsidiary objectives are to find out the opening balances of missing asset or missing liability. Missing asset or missing liability. This is the point you have to remember. Okay. If you are expert in preparation of statement of affairs and finding the missing asset and liability, then there is no problem. Okay. So this statement gives answer for 3 questions. This is the answer for 3 questions. First question is, what is statement of fare? What is statement of fare? You write this answer. Second question is, why statement of face is prepared? Why statement of face is prepared? Second question. And third question is, why statement of affairs is not a balance sheet? Why statement of affairs is not a balance sheet? For these 3 questions, you answer this. This is the answer. Okay. This is the statement of affairs. This is the statement of affairs. And I'll show the format of statement of affairs. Form of statement of affairs. You see the statement of affairs. Statement of affairs as on, you write the date. I have given the month. According to the opening date, you write the opening date. Liabilities, amount, asset, amount. And in the liability side, you write creditors. You write the liabilities. First is creditor, opening creditor, bills payable, opening, then outstanding expenses. If there are any outstanding expenses on the opening date, it may be outstanding salary, outstanding rent, outstanding wages, like that. Outstanding expense you take. Okay, third one. Creditors, bills payable, outstanding expenses, bank loan or any loans taken from the outsiders. Any type of loan you take. These are the some liabilities I given for your reference purpose. Okay, whatever liabilities are there, you write on the liability side. Then lastly, you write the capital. Okay, lastly, you write the capital. This capital may be given in the problem, or you may ascertain the capital. On the asset side, land and building is the first item. Plant and machinery is the second item. Then investments is the third one. Investments, bills receivable, debtors, stock, cash at bank. These are the examples I have taken on the asset side. Okay, these are the examples I have taken on the asset side. Then how to prepare this, you remember. I'll tell you about this. You write given liabilities on the liability side. You write the opening assets on the asset side, opening liabilities on the liability side. Then close the statement of face. Close the statement of face. Then whatever difference comes, that difference liability side. If the difference comes on the liability side, you write as capital. Capital. Okay, if difference is on liability side, that is capital. If capital is given in the problem, capital is given in the problem, that may be opening balance of creditor, opening balance of creditor, or it may be opening balance of bills payable. Remember this point. You write the given assets on the asset side, given liabilities on the liability side. If there is a difference and that the difference is on liability side, first preference is given to capital. If capital is given already recorded, then second preference is creditor. That is creditor, opening creditor. Credit is also there, then that is opening bills payable. These are the 3 points remember regarding the missing information. Missing information. And if the difference is on asset side, if the difference is on asset side, that is the opening balance of cash, opening balance of cash, or that may be opening debtors, or that may be opening bills receivable. First importance is opening cash. Second is debtors. You record as debtor, or you record as bills receivable. Okay. This is the point you have to remember regarding statement of affairs. This is the statement of affairs. Okay. One more item I recorded here. cash in hand. Close the statement of it, then difference. Difference is capital. Okay, you remember statement of affairs. Opening statement of affairs is prepared to find out the opening balance of capital or to find out opening balance of any asset or any liability. This is the important point you remember regarding this statement of affairs. This is the first one. Then next is trade debtors. Total debtors account. Why total debtors account is prepared? This total debtors account is prepared to ascertain the amount of credit sale. This is prepared to find out or ascertain the amount of credit sale made during the year. To find out the credit sale made during the year. Or it is prepared to ascertain the closing balance of debtors. Or it is prepared to find out the cash collected from debtors or amount received on bills receivable. Or bills receivable received. Amount of bills receivable received. Bills receivable received. Okay. This is the point you remember. Prepared to know the bills receivable received. Okay. What is debtors account? It is related to credit sale made to customer. Debtors account is nothing but your debtors means the persons who purchase goods on credit. Debtors. This account is prepared to find out the credit sale first. If credit sale is given, it is prepared to ascertain closing balance or opening balance of the debtors or cash collected from the debtors or bills received from the debtors. These are the points missing information. Debtors account is prepared to find out the missing information. Missing informations are credit sale, closing balance of the debtor or opening balance of the debtor, cash collected from the debtor, and bills receivable received. These are the missing information sometime. Okay. And you see the format of debtors account. Debtors account format. Particular amount. Debit side, the debtors account starts with debit balance. Okay. You write two balance brought down, or you may write directly balance brought down. Write the two balance brought down. Two balance brought down. It is the opening balance. This balance comes from the opening statement of affairs. Remember, this is from opening statement of affairs. Okay. You take the opening balance, then bills receivable dishonored. How many bills receivable dishonored during the year is the second item, debit side. And third item is, first item balance brought down, second bills receivable dishonored. Bills receivable dishonored is the second item. And third item is credit sale. This is important. This account is prepared to find out the credit sale. So credit sale is the important in this aspect. Credit sale. Three items comes on the debit side. And next credit side, cash or bank. Cash received from the debtors, checks received from the debtors. If cash is received from the debtors, you record. Okay, see this. If cash is received from the debtors, you record on the credit side. Checks are received from the debtors, you record as by bank. Cash received from the debtors by cash. For check received, you record as by bank. Next is discount allowed. Discount allowed to debtors. Okay. If the discount is allowed, cash discount is allowed to debtors, you record as by discount. Then if any debtor fails to pay our amount and that amount is converted as bad debt, then you record the by bad debt. And if any goods are returned by the customer, if the goods are returned by the customer, that is called as sales return, comes on the credit side. Debit side items increases the balance of debtors. Okay, debit side balance increases, therefore we debit these items. Debtors account increases, we debit, and credit the whatever goes out. We credit the whatever assets value decreases or whatever decreases are there. Okay. Then credit side we record the whatever asset increases or whatever the expense increases. Asset increase or expense increase recorded on the credit side. Okay, when cash is received, cash balance increases. Check is received, bank balance increases. Discount is allowed, discount increases, expense increases. If bad debt is borne, then bad debt expense increases. If sales return is there, goods increases. Therefore, increase in asset, increase in expense recorded on the credit side. Okay. And bills receivable, whenever you receive the bills, you record the bills receivable on the credit side. Allowance is given, you record on the credit side. These are the items recorded on the credit side. You see these: cash received from the debtors, check received from the debtor, discount allowed to debtors, bad debt incurred, sales returned by the customer, bills received from the debtors, allowance given to debtors. These are the items to be recorded on the credit side. Debit side